Good morning. Good morning, sir. How do we do today?
Can you hear me?
Talking to get somebody.
Taking out time from your very busy schedule. Yeah, we're excited to have you join us today. And we're certain and optimistic that we're going to have a good event today with your presence, and it's going to be very engaging as well as
The audio is not very clear. Can you hear me?
Without much ado, let's invite the speakers and the panelists to the high table before we go virtual, for our online community can see us. So we'd like to have all our speakers. Mr. Godwin, you're welcome. Thank you, sir. Mr. Diri, please come on upstage. Mr. Shino. So I think it's important for us to be well integrated and settled in before 10 a.m. Well, when the program will fully take its full course. all know today's event is it's going to be a hybrid one, and we already have some of our online community join us. So welcome to you virtually. For those of us joining us virtually, you're welcome. We are happy to have you join us. So we also have in-person attendance to this event because of the COVID regulation. We have very restricted members join us in person. So we are adhering to the COVID rule of social distancing and face masking as well. At 10 a.m. we're going to go straight. So welcome again. You're welcome as we settle in. You can say hello to your friends or our in-person attendants. Try to meet a new friend apart from your colleague and just ensure that the networking that you are here for is achieved. Good morning once again. Good morning, everybody. Good morning to those of us just joining us virtually. Good morning for those of us just coming in person. You're welcome to today's event. Today's event is on financial inclusion, microfinance, and microinsurance. We intend to have a very intentional yet a very intense conversation around financial inclusion today. So we have stakeholders already present. We have people from different spheres already present with us to give intellectual insight into today's conversation. So you're welcome. We're indeed privileged and excited to have you. My name is Maureen Ada-Leonard, and I'm the MD CEO of Etinard Consulting Limited. I'm privileged to be the moderator of today's event. So as a way of introduction, today's event is brought in partnership with the chambers of the Belgian Chambers of Commerce in Nigeria, as well as Etinard Consulting Limited. So Nigeria NBCC, as shortly the acronym for Nigeria-Belgian Chambers of Commerce, is the foremost bilateral chambers in Nigeria today. So the objective is to facilitate and promote growth in the Nigeria ecosystem. They are very big in ensuring that the microsector of the economy is active and is vibrant, and they are up to the potential that we are. So they create a platform to support businesses and also do the B2B business network to interested organizations in Belgium as well. Etinard Consulting, on the other hand, is a managing consulting firm. We work with corporate organizations to align
their business potential to the productivity matrix. So our input measurement is curating content and providing solutions to present day challenges. So one of such challenges that we've identified is in the micro sector of the economy, and we are happy that we are, as like-minded chambers and Etinard Consulting, we partner to ensure that we give the necessary attention, focus, and all the intentionality that this sector desires. We all know that this sector is special in its own and does require this intentional conversation that we're going to be having today. Research has shown that financial inclusion is a great challenge all over the world, but especially in Africa and in Nigeria specifically, because of the teeming population that Nigeria poses to have, because of the great potential and because of the human capital that we also have as a nation. So the report shows that about 41% of the adult population in Nigeria is financially excluded. So that number is huge. That number is indeed huge, and we know that there's a lot of potential and there's a lot of opportunity in that number that we're speaking to. The World Bank has also mentioned that financial inclusion is a way of reducing poverty and ensuring sustainable growth in our economy today. So this gives credence to why we should give this conversation all the necessary attention and discussion that we can gather today. So this event wouldn't have been made possible without the sponsorship of like minds, like we call them. We'd like to appreciate our sponsors and our partner in this drive. We'd like to appreciate United Capital for partnering with us. We'd like to also appreciate Leadway Assurance for this partnership, as well as the Guardian newspaper. So without much ado, let's go to for our online community. We'll say welcome. Thank you once again for joining us. We were privileged to have you. So we'll just go through the house rule for your engagement today. Like we mentioned, it's going to be a hybrid session and it's going to be a recorded event. So we'll crave your indulgence to please mute yourself and turn off your video. Only indicate when you want to speak by raising your hand through the icon and just indicate. The rules are also displayed for us here, for those of us attending in person. So the presentation and the discussion for today's event will be available at the website at the end of today's event. So you could visit the website to get more content of today's delivery. If you also want to partner with us for other events, please don't hesitate. You can get in touch with Norma or Taufik or any of the team. We'll be willing to have a conversation and engage with you further. So thank you all once again. Thank you. We want to appreciate everyone present here. And we are going into the mainstream of today's event. And we can start the event without having a word from the president of the chambers. So the president of the chamber is going to give his welcome speech virtually to us. But before the president comes, I think it's needful for us to have a brief introduction of who the president of the chambers is. Dr. Timmy Austin Peters is the president of the Nigerian-Belgian Chambers of Commerce. He's a specialist financial service lawyer with local and international experience. He's worked as a lawyer for the United Nations at Geneva, Switzerland, and for a leading commercial law firm in Lagos. Prior to establishing his law firm, Austin Peters & Co., he was a legal consultant to the Africa Development Bank in Abidjan, Côte d'Ivoire. He also serves as chairman of Domalong Engineering Limited, and he's been in that position since July 2014. Please let's make welcome to Dr. Timmy Austin Peters, the president of the chambers, as we take his welcome speech. Welcome, sir. We are happy to have you.
Thank you very much. morning, ladies and gentlemen, in person, in this new way of doing things. I hope this will meet all of our needs. So my job is basically, after the scene has been set by the presenter, is basically to say a few words about the chamber and to some extent set the scene for this webinar. I don't intend to speak very much because there are people who are, I think, better, more capable than I am to address the topic. So although I've been allocated 10 minutes to speak, I don't think I'll be using up to half of that. And I'm hoping that the time that I leave will be better utilized by those who have, I think, more important things to say. Essentially, the raison d'etre of the NBCC is to facilitate trade, cross-border trade linkages, primarily between Nigeria and Belgium, but you'll find that at the Chamber, we work between many European countries and Nigerian entrepreneurs, service providers, and people who have needs of different regards. And to this end, we undertake trainings, research, seminars, trade missions, and we handhold businesses that want to come to Nigeria. So this webinar that we are partnering to promote is just one of such of the kind of activities that we undertake. By extension of the work that we do, of course, we impact on many areas of human existence. We are focused on many topics over the years, and foremost amongst those would be agriculture, renewable energies, transportation, and as you have seen today, we are dealing with finance. What we are talking about today is of particular importance to me. As was said at the outset, I'm a finance lawyer, so financial inclusion is a matter that is very dear to my heart. So I was very excited when the NBCC chose this topic, and it's something that I'm very passionate about. Finance is of fundamental importance to the economy of Nigeria. It underpins any aspect of development that will take place. There is nothing that you want to do, regardless of what all the IT and virtual and tech and all sorts of gurus tell us. You need money to be able to get anything done. And without that, as I say, not much will happen. And in a country made up of so many SMEs, it is key to providing self-employment for the many unemployed people. It's clear government is never going to be the employer of all of the masses. It is clear that many of the big international industries that historically have provided employment will not be providing employment for all of these masses. What we have seen is that we have a very strong SME population. And for those who are able to tap into, even the most small amounts of finance, they are able to start businesses and get themselves going and get themselves employed. So this topic is very, very important. One of Nigeria's greatest strengths is our numbers. Pulling all of these people into the financial services system is cardinal to being able to harness all of this, their energy. So the whole topic of financial inclusion is of, as I say, fundamental importance. Beyond incorporating sheer numbers, the importance of financial inclusion is that you see a more structured economy. We get statistics so that we actually know what's really happening. There's better planning, hopefully by government, if they look at the statistics and react to what they actually see as improved government policy. And dare I say it, there's greater contribution to government's very much overstretched coffers. Now, far be it from me to promote Nigerians being further taxed. But the reality is our government revenues are far from what they should be. And given that so many of the people who are going to be newly included in the financial services network framework that we're talking about in a country such as this, it is small sums of funding that they're going to be looking after or looking for. So it is apt that this webinar should be about microfinance and not just the large sums of money which you hear about from the likes of Dangote and so on. This is relevant to the ordinary person, and hopefully, if news of this, the ideas that come from this webinar can get to them, it may be of practical utility to them. So I am delighted to be introducing this subject for deeper consideration by the various speakers that will follow me. I have no doubt that they will do justice to the topics allocated to them. I will therefore now yield in their favor and very much look forward to hearing from them. I hope we have a very successful webinar today, and I look forward to the dissemination of all of the no doubt wonderful ideas that will come out from it. Thank you very much.
Thank you very much, Mr. President. Thank you for that warm welcome. Really appreciate the President. Thank you, sir. You already spoke to today's event. You talked about the numbers that we'll have on the nation today. You also talked about the concentration that the micro sector actually needs, and that's why we are giving to this conversation all the necessary focus that we can gather. Thank you so much. That was a good intro and a good speech to our conversation, and we do intend to have a very vibrant one. So to give the keynote address for today's event, the resource person, they be well selected, and there are people you say that they've caught their teeth in corporate world into this conversation, and they don't only walk, they are walking their talk. So they have experience and they have the know-how of what it is to actually work with the micro sector of the economy. And one of such is the resource person that is our keynote speaker today, in the person of Mr. Godwin Egiamusore, Dr. Godwin Egiamusore. And I'll just introduce him to us by reading this brief profile to us. Dr. Godwin Egiamusore is an acknowledged entrepreneur who has effectively deployed financial and social empowerment services to improve the lives of members of low-income households. He founded Lift Above Poverty organization, LAPO Microfinance Bank, a premium microfinance institution. This was founded in the late 1980s. He's currently the chairman of Godzi Microinsurance Company, the first regulated microinsurance company in Nigeria. His doctorate degree is in policy and development studies with emphasis on microfinance policy instruments and financial inclusion. Like I said earlier, Mr. Godwin has experience. We brought into this conversation. From his profile, you agree with me that he has experience in microfinance and he has experience also in microinsurance. So that's why he's giving the keynote address and to kind of stir up to this conversation. Please make welcome with me, Dr. Godwin Egiamusore.
Thank you for your kind words and introduction. And also want to appreciate the invitations to be a part of this event, especially being asked to address the topic, inclusive finance, the nexus between microfinance and microinsurance. The desire for inclusive finance or financial inclusion is not new. It has always been a part of development discourse. And therefore, the early attention was to microfinance was financial inclusion was actually directed at rural finance, with the understanding then several decades ago that the rural economy is deprived of financial services and therefore also regarded as the epicenter of poverty, now that we have urban poverty as well. Therefore, the quest for financial inclusion was also what gave rise to first microcredit and later what we call microfinance today. The renewed emphasis on financial inclusion today is in part because of two reasons. Number one is that the channels of microfinance institutions tend to be limited, and therefore there is need to address that. Secondly, the lack of comprehensiveness in terms of services provided by microfinance. And therefore, the current financial inclusion discussion today is around two things. One, digitalization of the channels and products, where you come in the fintechs. And secondly, is the expansion of financial finance beyond credit and savings to others like mutual funds and also microinsurance, amongst others. Financial inclusion is essentially the availability of range of financial services at affordable cost to all segments of the population, especially those who are disadvantaged or low income group. So financial inclusion, therefore, is about liberalization of access to complete sets of financial services to all that are willing and able to use financial services. In summary, it is financial inclusion is finance for all. There are a number of dimensions of financial inclusion. I will just mention a few of them. The first is the fact that there should be comprehensiveness of financial services, savings products, credit products, micro investments, mutual funds, leasing, and all that. The second is the fact that there should be unhindered access to financial services by all. There should be no discrimination on the ground of disability, gender, faith, and of course, location. Rural dwellers should also have access to financial services. And lastly is the fact of affordability. Affordability in terms of pricing, demand for collateral, and of course, the requirement for accounts opening. For microfinance, on the other hand, is the provision of financial services to low-income people, especially their micro and small businesses, and doing so in a manner that it gets to the people that are usually considered by the mainstream financial system as unbankable, banking the unbankable. Beyond just delivering and collection of small piece of loan, I believe also that micro finance is also about the set of elastic institutional structures and processes that makes it possible to deliver appropriate financial services to low-income people, and also doing so on a sustainable basis. Microinsurance, on the other hand, is the design of product for low-income people to also support their protect their micro and small enterprises. In the same way, microinsurance is the liberalization of access to insurance services. It is about taking the insurance, all classes of insurance, to the street to meet the other ordinary people. In a way, therefore, if you look at microinsurance in Nigeria, I want to focus on microinsurance because it's like the newest thing after microfinance. There are a lot of opportunities for microinsurance in Nigeria. It is not just because this nation will have high population. That's a fact. But the fact that we have a exceptionally enterprising people, and that actually is also opportunity. People are willing, obviously, in spite of the low awareness that we will address later. The fact that it may not be desirable, the whole issue of the increasing insecurity in the land, but it presents opportunity for micro insurance companies. People are increasingly, especially even the people at the bottom of the society, willing to also protect their assets. And therefore, that is provide an opportunity. The other thing is that the other opportunity is that we deliver micro services, whether microinsurance or microfinance or whatever. Aggregation is very important. You need aggregators. And good for us in this nation, we have so many associations, from community-based association to cooperatives, trade association, or what have you, and even the microfinance bank. And these are channels that can be used to deliver microinsurance. And of course, microinsurance has left the shadow of the conventional insurance today with its own policy and guidelines. And for me, I think this provides a real opportunity. The policy, for instance, make for inclusion of informal institutions as distributors rather than the use of the conventional, or in addition to the use of the conventional insurance brokers. And so when you therefore look at microfinance, financial inclusion, where microfinance meets microinsurance, the first thing is that two of them are key enablers of financial inclusion. They target those people that are excluded from the mainstream financial system. That's number two. Number two is that microfinance provide loans, credits to empower ordinary people to build assets. On the other hand, microinsurance protects those assets. It enhances the resilience of their otherwise vulnerable micro enterprises. And there also is the fact that it is the interest of a micro lender to ensure that its borrowers are hedging or managing their risk with the support of microinsurance company. And so, on the other hand, the micro insurer therefore will want to address to reach a pool of policyholders already clients of the lender. What therefore are the challenges in our environment to do to microfinance? Of course, to some extent, microinsurance, of course, microfinance. The first challenge is the fact of the high cost of operation. Like most micro services, delivering microinsurance or microfinance has huge cost implication, because you're going to reach a small units of people, and that's even high cost. The other one, especially when microfinance and microinsurance comes together, is the skill gap, especially among the staff of microinsurance and microfinance, in skill gap in handling insurance policy. The other one is the fact that to be able to deliver microinsurance policy clearly, you need a lot of national demographic and socioeconomic data base. We do know how the deficit we have in this area. I think more challenging issues are around social, cultural, and religious barrier. In the first place, many people psychologically believe that insurance policy is not for them. It's only for rich people and big businesses. And therefore, it's going to be a bit challenging, to reach those people. And on the religious grant, when you engage ordinary people, you propose insurance policy, the user response is likely going to be, God forbid. Register your sewing machine and said against that. You said, God forbid. And that can also be really challenging. The other one is also the challenge of low awareness on insurance, and also specifically on microinsurance. For most people, when you talk about microinsurance to them, ordinary people, it's likely to come in the form of this biblical saying. They'll say, oh, savings I know, credit I know, what is microinsurance? And that's going to be a huge challenge. And so there's going to be need for massive investment. What therefore, by conclusion, what therefore are some of the success imperatives and recommendations to ensure financial inclusion through microinsurance and microfinance? The first thing is that there's going to be a need for huge investment in capacity building for people. You hear microfinance today everywhere, but I can tell you, because I've been involved as a non-profit for over 30 years, it took huge investment, effort of people to create what we have today that we talk about microfinance. About 25 years ago, when I met some bank managers, and you say, the first thing they ask you, what is microfinance? I think nobody asks that today. So microinsurance also needs that type of investment. Creating awareness is going to be important. We need to engage key segments, critical segments of the society, religious, political, and traditional leaders. I think government should also, in the process, incorporate access to microinsurance into whatever poverty alleviation program. For me, and it's true, the loss of access deepens the poverty of the poor people. And so we need to see how poor people can have access to microinsurance. Flexibility and simplicity of approach is extremely important. We must be able to turn the conventional microinsurance practice on its head to be able to ensure that you are able to reach ordinary people. And regulatory environment, good news is that there's a policy for microinsurance today. But I still strongly believe that, like in every large group, there's always a room for improvement. And therefore, I think there is need for, continuous review of that policy, partnership and leakages. There should be partnership within the industry between the conventional conventional insurance company and microinsurance company, and there could also be partnership and linkages across sector. By way of closing remarks, microinsurance and microfinance are key to achieving two goals of financial inclusion and poverty reduction. Low-income people and their micro, small, and medium enterprises are highly vulnerable. So assets and successes built when you access credit, you build businesses can be wiped away by flood or fire in the market and whatever. So there is need to support ordinary people to hedge their challenges. But I also believe that, like microfinance, especially at the section, micro insurance is going to contend with a number of challenges. I have actually identified some of them, but they are overcomable. Those challenges are overcomable. And therefore, I will recommend that there's the need for us to pay more attention. I want to commend the chamber for doing that and also for inviting me. Thank you.
Thank you. We couldn't have expected anything less from you. Given your thoroughness in what you've done so far with LAPO and what you're doing with Goze Microinsurance. So we are excited that you've given very interesting introduction, as it were, to other speakers and to what they will be speaking to. You've talked what particularly resonated with me was your very good description of the rural areas as being the epicenter of poverty. Yet they are the ones that are being excluded financially, and they're the ones that will need all sorts of concentration and focus that we can give them. So thank you once again. Thank you for the challenges that you've also enumerated with the microinsurance sector. There's work to be done, you said. There's opportunity there, but there's great work to be done as well. Thank you. You mentioned, and I think you're speaking from experience, a huge capital and investment that LAPO probably took from you, and today it is a success story. So that's some words, that's some learning for those that want to get into the micro insurance space. So thank you, sir, once again. Your conversation has given a great flow into the next speaker, and that will be Abdul Malik Etudayo. Abdul Malik.
Yes, good morning, everyone.
Okay, Abdul Malik will be presenting to us virtually, and he will be speaking to us today. But before I introduce this topic to us, I think we should formally meet Abdul Malik as I read his profile to us. He's a senior analyst, field agriculturist, underwriting and operation at Midway Assurance Company. He's a first-class graduate of agriculture and field agriculturist in the northern region of Nigeria, where he embarks on field survey and the entire agricultural value chain. He also serves as a team lead in area yield index insurance, which involves information gathering on weather pattern and prediction, as well as risk pricing. He intends to add value to the insurance architecture using modern information technology, while he focuses on being prompt in service delivery, honesty, efficient, and innovative as well. The use of index-based agricultural insurance products for managing the risk of small-scale farmers in Nigeria is the topic Abdul Malik Etudayo will be speaking to today. Mr. Abdul Malik, you have the floor, and we are very excited to have you. Please take the stage now virtually. Thank you.
All right, thank you everyone, and you're welcome to this platform. It's good to be here. Actually, I'm presenting on behalf of my boss, Mr. Alfato Nayola, the head of Africa Microinsurance. He's on his way to Kenya right now for the same purpose, to have a workshop on this same topic with other stakeholders from commodity associations in the country. So, sorry, can you all see my slide? Can you hear me?
Yes, you can. Let's go ahead.
Okay. All right. So we'll better appreciate the use of index-based agriculture insurance, where we do it in comparison with the traditional indemnity multi-peril crop insurance that we used to do, which covers only the cost of production of the farmer. But in this case, what we are looking at is a wide range of farmers, because if you have up to 100,000 farmers, 200,000, 300,000, like the AMCO Borers program, it is very difficult for you to visit individual farmers to conduct a pre-loss survey or a post-loss survey as far as it's concerned. So the use of index-based agriculture insurance has brought to light a better way of insuring these farmers and making sure their risks are covered. So index-based agriculture insurance pays out losses or claim on the value of an index. Here we'll be looking at yield and weather index. Yield index is taking a look at the expectation of the farmer. That is, at the end of the season, I have cropped 1 hectare of wheat and I'm supposed to get 2.2 metric ton. In case there is flood, in case there is fire, in case there's incident of pest and disease, other adverse weather conditions, what am I going to do? How do I repay back my loan? How do I recover the time I have wasted? This is what this product is looking at. So if in the end, the farmer is not able to get what he is expecting, so the insurance come into play to pay him for that shortfall in the yield. So it will be almost as if the farmer has harvested and sold. That's the way this product is structured. And for the weather index, we are looking at it's a kind of a parametric insurance where it does not involve ground losses. Losses are determined using data from satellites. For example, if in the first 10 days of planting your rice, you're supposed to get an amount of rainfall for optimal development of the crop. If that amount of rainfall, if you couldn't get it in that area, you understand? So insurance will have to compensate you for the shortfall of the rainfall you have received. So it is so sometimes it is called replanting guarantee. That is, it enables the farmer that for the seeds that did not germinate or for the seeds that did not do well, for the first 10 days of the life cycle of the crop, he's able to go back to the market, get another quality seed and replant again to still meet up with the season instead of losing out completely. All right, so how is the product structured? There's what we call Nigeria is divided into various agroecological zones. We have a consultant on this area in index insurance, advisors. So they have divided Nigeria AEC are places that have similar microclimate. That is, places that are likely to receive the same amount of rainfall from historical data, the same amount of day length, evapotranspiration, and all other weather index. All right. So for the period of cover, it is usually cropping, cultivation in Nigeria or farming in Nigeria is purely rain-fed. All right. So we have the dry season for those people that are close to dam, are close to water source, and can afford irrigation, but they have tube wells. And we have the wet season. Usually the dry season is commence dry season from November to April or May of next year, while wet season is usually May, June to November. All right, so those are the 2 seasons that we usually cover this farmer for. So what is the basis of coverage? This is where the advantage of index-based insurance over indemnity. Here, we are looking at the farm gate price of 1 metric ton that the farmer will sell when he harvests. We are also looking at what is the likely yield the farmer is going to get at the end of the season. So since the country has been divided into AEC, we already have historical data on all kinds of cereals and some root crops to say farmers in Sabo in Kaduna are likely to get 3.3 metric ton. Farmers in a part of Benue are likely to get 2.7 metric ton. So these are the contract parameters we use in setting the policy, so that in the end, if the farmer is not able to meet up to this requirement, insurance will not have to come in and pay him for that shortfall. All right. So the coverage level usually, because we don't guarantee 100% most of the times, if the average production history of an area is 3 metric ton, for example, insurance can guarantee you 2.7 metric ton or 2.1 or 2.2, as the case may be, depending on also the amount of premium the farmer is ready to pay.
You can hear me.
Right.
Someone is interfering with your presentation. Please give us a minute. Let's assess that so that we can have a good flow. So I would like to. Okay, from your background, we are having some interference from your background. So visibility is kind of low for in attendance. If you could kindly attend to that, ensure that your background has little or no noise. So that will help.
I'm sorry, I'm just trying to, I'm going to try as much as possible to talk a little louder. Is it better now? I'm in the office actually, so that's why we're hearing some work. Is it better, right?
It's better.
Okay, can I move on to the next slide?
This is better now, much better. Thank you so much.
All right, thank you. So how is the contract structured? There's what we call the trigger. The trigger is the threshold below which a farmer is going to be entitled to a payout. For example, if the APH, the average production history of rice, is 3 metric ton, for example, and you already guarantee the farmer that if you have 2.1 metric ton, you are good to go. So 2.1 metric ton becomes the trigger of the policy. So if the farmer gets anything less than 2.1 metric ton, you have to compensate such farmer as a result of the peril insured by the policy, which are inclusive but not limited to flood, fire, uncontrollable pests and diseases, frost, etc. There's so many of them, things that are natural that is outside man-made. It's good to note that here, bad farm management practice is not covered. For example, if you're supposed to apply 4 bags of NPK to your rice farm, I decide to apply 1. Of course, there's going to be drop in yield. So such farmer is not going to be entitled to any payout. That is why this product is designed to cover area and not individual farmer. So for example, if in AEZ 30, you have 100 farmers there. So it is the average yield of that area we are going to use to judge the whole farmer in that region, not what the individual farmer has gotten. So this will also eliminate the possibility of moral hazard, where a farmer is planning to keep 3 bags of fertilizer and apply only 1, or keep 2 and apply only 2, because he knows that in the end of the season, if other farmers has done well, they have done the right thing, and he has not done what he's supposed to do, he's not going to be entitled to any payout. So the exit is the threshold below which the farmer receive maximum possible payout. For example, you can set the contract exit at 10%. That is, if the farmer gets less than 10% of what the policy has promised, he's entitled to a maximum payout. All right. So the unit area of insurance, like I've explained before, is what we call the agroecological zone, places that have micro or similar climate, the same amount of rainfall and all of that. So average production history, we have data pool for all kind of series in different AEZ. You understand? So from this pool of data, we are able to say farmers in this place can get so metric ton of rice, of wheat, of maize, of sorghum, and etc. So this is the data we use in setting the contract. So what do we usually need to do the underwriting? The historical data availability and quality of data, the uniformity of the unit of area of insurance, the risk to be covered, consumer education. This is very important because most times we find out that these farmers, in the end, they do not actually understand what this product entails. So most times we need to engage them before we are able to sell this insurance to them, so that in the end they understand the policy. They see that, because most of the idea they have is that, oh, I have a loss, insurance does not want to pay. So the need for constant engagement with the aggregator and the small scale middleman is very important. Then the concentration of the farmer. How are the farmers distributed in any area? How are they concentrated in any area is very important too. Then the size of farm of each farmer. Some farmers can have as low as 1 acre, some can have as high as 5 hectares, that is per farmer. Then the homogeneity of the farm practices. It is also assumed that in each AEC, these farmers have the same agronomic calendars, they are planting the same time, they are applying fertilizer at the same time, and they are weeding also the same time. So how are we able to evaluate the yield of the farmer? It is what we do that through an exercise called crop cut. Enumerators are sent to the field 2 weeks before the farmers will start harvesting. So what they do is that they take random samples from these farmers to be able to determine the average yield of that agroecological zone. And this is what the policy we use in judging the farmer. Satellite image to determine the greenness of the field. You know, in this inception of the policy, we must have mapped out where these pastoralists are and the areas or how far they go to graze their cattle. So in a situation where there is drought, there is inadequate rainfall, and the greenness of the vegetation has dropped, we will know that there will be competition because of probably overstocking, and also these farmers will be entitled to pay out to either source for fodder elsewhere to feed to their livestock. So why do we choose index insurance over the multi-peril crop indemnity insurance? It covers multiple perils that can lead to low yield. Like I mentioned, there is fire, there is pest and disease, there is wild animal encroachment, there is so sometimes you can go ahead to also consider what we call the herdsmen encroachment, dependent on where the farmers are cropping and the premium the farmer is ready to pay, because it's becoming a frequent risk in the country. Also, the farmer is able to kick against adverse selection of risk. If you are doing indemnity, for example, I can visit your farm for pre-loss and tell you that, oh, the way I'm looking at this farm, I cannot cover flood because of social reason, or I cannot cover pest and disease because this has been historical, or I'm putting a benchmark to it. But for area index, all the perils in the policy, the farmer is entitled to a payout if it's become a result of the shortfall of the yield of the farmer. And also the administrative cost is also removed from this kind of policy, because for the indemnity, if I'm accepting a policy for a farmer, I will have to visit the farmer and see the size of the farmer's land, see when he has planted and all those. And when each farmer suffers a loss, I must visit those farmers to determine the extent of damage. But for the index insurance, it is the other way around. It is the result from the crop cut exercise, the yield that is measured from the farmers that is used to judge the farmers in that area. So the individual farmer losses are not considered, or the individual farmers gain are not considered, but the judgment is based on the total number of farmers in a particular AEC. So this makes it very comfortable for both the insurer and the insured to administer. All right. So also, the payout is determined based on the sample farms already selected to determine the agroecological area yield. For example, we've been doing this with the CBN ABP, with NISAL, with Babangona, and so many other commercial farmers that are doing outgrass scheme, Olam, FMN, and the likes. And it is very important to know that if at the end of the season, the computer randomly selects farmers that crop cut will be conducted in their farms. So when this is done, the sample is analyzed and the yield is used to judge the farmers in this area. In a case where there's need for payout, all the farmers in the AZ enjoys the payout. In a case where there is no payout, all the farmers in that AZ are not entitled to payout. So this is the best product for, as far as the insurance sector is concerned, for covering small-scale farmers in numerous number, because we are not able to administer the indemnity type of insurance to individual farmers. Thank you.
By Mrs. Odiri Okini, and I'll introduce her to us as well. Mrs. Odiri Okini is a high-performing executive and one of the top 100 career women in Nigeria today. She has well over 15 years in the financial service industry. She's the Chief Executive Officer of United Capital Asset Management Limited, UCAM, the investment and management business of United Capital PLC, where she leads a team of investment professionals dedicated to delivering superior performance across various asset classes. Mrs. Odiri is going to be speaking to the financial mutual funds, the financial inclusion strategy to imbibe. You're welcome, Mrs. Odiri, where she's going to be talking to us in person, physically. Could you kindly make welcome Mrs. Odiri Okini as she takes the floor?
Thank you so much, the organizers of this event, Nigerian-Belgian Chamber of Commerce and Etinard Consulting Nigeria. I've been asked to speak briefly on the mutual fund, the financial inclusion strategy to imbibe or adapt. I listened extensively to Dr. Godwin, and a number of the points he mentioned also resonates with micro savings, which is where I see mutual funds. Mutual fund is a great micro savings tool to drive financial inclusion because to a large extent it provides a low-cost way to pool the savings of investors for investment in the financial market. So for mutual funds, basically you have a minimum entry amount of 1,000. You can as well have a minimum entry amount of 100 naira, which is why basically it's a great micro savings tool to drive financial inclusion. In Nigeria, currently, in the last 5 years, we've seen the mutual funds industry grow significantly to currently over 1.4 trillion, which is commendable. However, Nigeria still ranks low in mutual funds to GDP ratio when you compare that to other African markets and also you compare that globally. Today, Nigeria is the largest economy in Africa. It has a mutual fund assets to GDP of about 0.5%. When you compare that to the second largest economy, which is South Africa. South Africa currently has 63% as of 2016 mutual fund asset to GDP. We look at countries like Malaysia, which is a developing country, also like Nigeria. Malaysia has a mutual fund GDP ratio of about 29%. Compare that to Nigeria of about 0.5%. So you can see that there is still a significant opportunity for the industry to continue to grow. India also has about 8%. In the global markets, they have ratios in the range of between 60 to 80%. So what this means is that there is still a significant opportunity for the industry to grow. There is a need to deepen mutual fund investment in the country to drive financial inclusion through product development and investor education. Today in Nigeria, we have about 33 asset management companies managing mutual funds. And compared to a population of over 200 million, we have barely 120 mutual funds in Nigeria. India alone has 2,100 mutual funds. So I'm just trying to show you the gap that still exists in the market with regards to mutual funds or with regards to micro savings. There are also many people in Nigeria who don't understand how mutual fund works or how it can be used to drive and enable them achieve their financial goals. If you look at also the investor base of the assets, the mutual fund assets in Nigeria, it's still concentrated in tier 1 cities, the Abuja, Lagos, Port Harcourt, and then the closer environment to these cities. Well, I was talking to Dr. Godwin this morning, and it was interesting to see how LAPO has driven microcredit in the rural areas. You go to those in-depth cities and or town, and you see LAPO microfinance bank there, which means that those guys can easily resonate, with those institutions, and then they can easily work with them. But for the mutual fund industry, the asset management industry, basically you see the major players playing in these big cities. So if I go in depth now, everybody knows what mutual fund is, or how they can save, or how their 50 naira or their 100 naira can work for them. The major impact of mutual funds, or what it is essentially supposed to be, is today we all buy treasury bills. But for you to be able to invest in treasury bills, you need a minimum of 50 million. But what mutual fund basically does for you is a vehicle to pick the 100 naira, the 50 naira, bring them together, aggregate them together, and be able to buy those treasury bills. And then those retail savers in those rural areas are able to also earn significant return on their investment. So for mutual funds, it's a great savings tool to drive financial inclusion. But one of the major challenges we have, I'll speak to some of the challenges, is the fact that it's not easy to deploy resources or the infrastructure you need to even penetrate those areas. It's a lot, and it's a lot for probably a single firm to be able to do. So which is why majority of the major players tend to shy away from it and focus on areas where they don't need to deploy significant resources, to be able to generate some good inflows. Another major challenge we have is investor education. I spoke earlier and said very few people understand what mutual fund is. But how do you begin to educate the rural areas or the investors or the retail individuals in this market how mutual fund operates? Because to a number of them, it's a bit complicated. So you need the resources, you need the cost of going to push financial inclusion on this campaign here and there. It's a lot for a single firm to be able to take on. So one of the things I picked up from Dr. Godwin's presentation is the fact that they need to collaborate, not just collaborating between the fund managers and the regulators and the government, but collaboration between the microinsurance company, collaboration between the microfinance company. So as you are selling your microfinance, you are selling micro savings, you are selling microinsurance. So instead of us having silos where you are talking about microfinance and you go, so that person come talk about microinsurance and you go, so that person come talk about micro savings and you go, there should be that collaborative effort. So there's one message being pushed across to the rural community, to the retail investors there, and it's easier for them to see how this same message cut across this same area and it's beneficial to them at the end of the day. Now, one major strategy to adopt to be able to imbibe financial inclusion strategy is product development. Today, if you look at the nature of mutual fund assets, it's concentrated in fixed income and money market securities. In the foreign market or in the global market, you have a significant portion of their mutual fund assets in equities. Why? Because equities might be risky, but one of the major tools of mutual funds is diversification. So if you want to diversify and all you are concentrated in treasury bills or you are concentrated in fixed income security, if there's anything happens to that market like we saw last year, we saw treasury bill to a large extent go to as low as 0 point something, in treasury bill. And so what that means is that everybody's your investment portfolio to a large extent have gone so low that you begin to wonder, okay, how do I survive for retirement? So that diversification is key, but the product we have, the current product structure we have is still in the traditional space of money market and fixed income. So that once there's a loss in that area, to a large extent, it magnifies the entire loss in an investor's portfolio. So product development is key. How do we create products that will tap into the low savings in this area, while at the same time protect their principal? Another thing I would like to speak to briefly is on distribution. So yeah, I talked about the structure to get into those markets, but how do we create a strong and robust distribution channel to be able to deploy this retail savings or this micro savings to this area? Today, we talk about agency banking. You know, how do we take the commercial banking branch network and deploy them into this area? So using that channel also can help to deploy micro savings or microfinance and insurance also into this deeper market or this off tier one market. So penetration into the rural area is important, and the distribution channel that we deploy can help us to achieve that. And then lastly, I want to talk about aggregators, which Dr. Gordon speak to. We call them distributors in the investment management space. But right now, there are no incentive for you as a distributor to go and open shop, you know, in this rural area. So we rather just focus in tier one space. Now, what kind of incentive can we create as government, as regulators, to be able to encourage people to go and set up as an intermediary? You know, the truth is that for the rural community, the more closer you are to them, the easier it is to sell to them. If you set up your big office in Lagos or Port Harcourt or Abuja and you are talking to them, they don't see you. But when you are closer to them, oh, it's my neighbor that said that she has one mutual fund that is easier to connect with them, it's easier to sell to them. So distributor is key, and it's right incentive, you know, for these distributors to go into those markets is also very important. Lastly, I'm mindful of time. So just in conclusion, one of the key points I want to put across that I've seen put across all that I've been said today is investor education. You know, we need to educate, we need to go beyond talking to the stakeholders. We understand the structure of microfinance, we understand investment, you know, but there are people who don't understand it, and those are people who need to begin to build this conversation to and take it beyond the stakeholders who understand this to the stakeholders who really need to understand. So what infrastructure do we need to create to take this conversation into the deeper area? Rural area has been excluded financially. That is set. You know, that is not debatable. But the question is, how do we take this conversation to that area, you know, in order to ensure that, you know, these people understand what we are saying? Technology is key. Technology is great to be able to do that. You know, but the truth is, even with technology, it is the people in the tier one cities who have access to this technology, who have access to internet. If you go to my village in Eku, I'm not sure they know what Google is, or even if they do, but how often do they use it? You know? So yes, technology is good, but we also need to ensure that infrastructure to drive that technology is also in that area. So I'll stop for now, and I think that the conversation will also continue after the session. So thank you very much.
Thank you so much. Indeed, the conversation will continue during the panel discussion. And we'll hear you talk about how we can deepen the mutual fund market. We talked about collaboration. Indeed, there's no need for everyone working in silos. We need to have stakeholder approach and stakeholders conversation. So you also talk about how to diversify the market and how to have investors education. Very well said. Could you once again appreciate Mrs. Odiri for such giving our time so brilliantly for delivering on that, speaking to our paper. So we are getting on, we're going into deep dive mode now, and we still have more speakers talking to us today. So we've had like a mixed match of speakers, some doing in person and others doing virtually. So our next speaker will be speaking to us virtually as well. And Dr. Yesterday Oyetayo. Dr. Yesterday, are you online?
Yes, I am, Maureen.
Okay, good to have you. She's Director, College of Insurance and Financial Management. I know that she's very active in education and enlightenment program of what inclusive insurance is all about, and we'll get to hear from her. Let me read a brief profile of Dr. Oyetayo to us. Yesterday is a lawyer with over 3 decades of experience in the Nigerian insurance industry in various capacities, but has been an insurance trainer for the last 2 decades. She's the pioneer rector of the College of Insurance and Financial Management, the training arm of the Chartered Insurance Institute of Nigeria. She is an International Labour Organization certified trainer in inclusive and microinsurance topics as well. She has delivered numerous training in inclusive insurance implementation with the impact insurance facility of the IMO. Also yesterday, she is the rector of the College of Insurance and Financial Management, and she will be speaking to us today on inclusive insurance for SMEs in Nigeria, the prospects and the challenges. Could we make welcome Dr. Oyetayo as she takes the floor virtually to give credence to our paper.
Thank you very much, Maureen, for that kind introduction. First, I want to thank the organizers of this workshop for inviting me. It's an opportunity to share some of the things that we do at the college with everyone here. I can see some people, I can see Bert here and some other guys that we work together at the college. Without wasting much time, my topic is inclusive insurance for SMEs in Nigeria, the prospects and challenges. My agenda is small, it's a 10 minutes speech. I want to look at nature of SMEs, differentiate them from micro enterprises, look at the risk management practices of SMEs, what potentials inclusive insurance has for this segment of our market, and the challenges we have from the supply and demand side, and also end my speech with necessary steps. Briefly, let me quickly go into nature of SMEs. They are very vital to the economy. They represent about between 420 or 510 million enterprises in the world, according to IFC, and like 95%, between 80 and 95% are in the emerging markets, which include Nigeria. And the nature of the SMEs is that they are varied and they are various sectors: agriculture, mining, local commerce, the production for local market, export market, services, event planning. They're all over the place and they do not have the same risk management needs. So, but a vast majority of them are underinsured. That means they represent an untapped market for the insurance industry. However, for this presentation, I want to really differentiate between SMEs and micro enterprises. For micro enterprises, usually there's high dependency on the owner, and there's little distinction between the family fund and the business finances. So it's like everything is modeled up together. And basically, the role they play in the economy is just to support basic livelihoods. However, SMEs are business owners that have a number of employees, and they are significant for the growth and development of the industry. In Nigeria, we have found out that the Bank of Industry actually broke down micro enterprises, differentiated micro enterprises and small enterprise and medium-sized enterprise. For anything with less than 10, any organization with less than 10 staff, it's said to be a micro enterprise, and anything above 11 staff is small or either small or medium enterprise. And also the turnover for micro enterprises are pegged at 20 million, whereas for small and medium enterprises is 100 million and above. Aside that, we find out that in Nigeria here, micro and small medium enterprises represent 49% of the GDP of the country in the last 5 years. And a lot of them only 10 to 15 of them are in manufacturing output, 50% are in industrial jobs, and 99% are actually in various businesses. Why do we need to talk about SMEs? Because it is significant that we promote and ensure that SME industry is sustained for economic growth. Not only do they add to the growth in GDP in terms of output for goods and services, they create employment at a relatively low capital cost. They are a vehicle for also reducing the disparities, income disparities between different levels of the population. They are also a means of developing skilled and semi-skilled workers that will enhance our industrial capacity in future. They also sort of provide both backward and forward linkages between different sectors of the economy, economically, socially, and geographically. They provide opportunities for developing appropriate technological approaches, because it's like a grooming ground for industrialization, and they are often an excellent breeding ground for entrepreneurs. Is there any problem? Can you hear me? for entrepreneurs and all that. So it's like the engine room for development of any economy. So we need to pay particular attention to it. I know the banks are doing the best they can, but on the side of the insurance industry, there needs to be a lot to be done because we don't even understand them yet, not talk of servicing them adequately. But SMEs have risk, and if you permit me to let you know that insurance is a risk mitigating tool. And as we claim, is the most efficient risk mitigating tool that one can have. And it's also a pillar of the economy because it supports business. It helps businesses and individuals build resilience to different risks that we face in our personal or business life. These risks are also existing in SMEs activities, and I've broken them down into 4 categories of risk. We have what we call the hazard risks. These are risks that are completely out of the control of the business owners and unexpected events such as fire, theft, or disease or liability claims. We also have financial risk, which has to do with the liquidity of the SMEs trying to get finance or credit, and sometimes could be changing in prices of foreign exchanges. Foreign exchange rates, you'll be surprised that the recent hike in foreign exchange has actually affected everything in Nigeria, including garri and beans that we buy. So it's also a risk that is present for SMEs. And SMEs also are faced with operational risks, something to do with not having the necessary human resources or talent or skills or using the requisite technology. And also they have strategic risk, things to do with planning for the future, reacting to environmental factors or regulatory or political changes. These are all risks that SMEs face. If you ask an SME to come here, a member of this group to speak today, they'll be talking about finances and finances and finance, but that's not the only risk they face. However, what can insurance do? Insurance, like I said, is a risk mitigating tool, but insurance is not built to cover all manner of risks, as I shall explain later to you. The first 2 risks, maybe insurance can cover, but not every risk. I'm going to get to that in a moment. How do these SMEs manage their risk? Before a risk occurs, what they do is they try and diversify their income, invest in this, keep money there, just to ensure that in the rainy day or when they're in trouble, they are faced a shock that can actually affect their business, they can fall back on it. So that's what they do before a risk occurs. But when a risk occurs, there are a lot of things they do. Sometimes they go borrowing from friends or families or neighbors. Sometimes use their savings. Sometimes they start consuming less because they cannot afford to eat much. Sometimes they scale back on business because they don't have money to put the necessary input into their business activities. And then the last resort is selling assets. Sometimes they sell personal assets, and sometimes they sell business assets. That is assets that would have been used to fetch them money in the first place. So you find out that they are highly vulnerable to risk. And insurance is in the business of risk, so that this is what insurance industry should be looking at. Insurance, because I know a lot of speakers before me had actually talked about microinsurance. Yes, we talk about microinsurance, but then we find out that the people excluded in the insurance bracket are not just people in the micro level. We have some people in the meso level. So rather than talk about microinsurance, I choose to talk about inclusive insurance. And that is insurance that will provide a risk management tool for not only low-income people, but also unserved insurance market segments, because there are a lot of unserved. Right now, we have only about 2% of adult population have a kind of insurance or not. So we're talking about a class of insurance that provides protection for low-income and unserved market against perils in exchange for premiums that are proportionate to the likelihood and cost of risk. So it has to be very, very proportionate. In this category of insurance cannot make too much profit, because if they are not making claims, that means you are not adding value. So inclusive insurance is particularly about providing insurance that is affordable, that is accessible, appropriate to the needs of these people, simple to use and understand, and responsive. That is, they have timely and reliable responses to queries and even claims. This is the kind of solutions that inclusive insurance can actually offer the SMEs. Affordable risk management to affordable products, something they can finance from their cash flows, knowing that this category of the market have unstable and irregular income. So that has to be put into the products they offer. It has to be accessible, available in convenient locations, not that they have to be the trouble. It has to be appropriate for their own priority needs, not selling generic insurance products to them. It has to be simple, possibly in a language that can understand. It doesn't have to be in English, because in other service sector, we're having
You should be wrapping up by now.
Sorry, time up.
You have a minute to wrap up. We'll continue this conversation during the panelist discussion.
Okay, so like I said,
yeah.
What can insurance do? Insurance can provide for the first two risks, but not for the large one. Okay, let me go straight to the challenges. With the SMEs on the demand side, competition, they're competing with existing risk management tools. These SMEs already have the way they manage their risk. So the competition for insurance is those ones. Ability to provide more value to them than they do. Lack of experience in insurance on part of SMEs. They're sometimes not easy to reach. They have a negative perception of insurance. Even the experience with insurance they get through fund providers like MFIs and fund providers like NASA and all that does not give them satisfactory experience. And on the insurance side, they have insufficient market. They don't know market information. They don't know enough about SMEs to provide products for them. They lack understanding of market. They don't have good products that give them client value propositions, and they have distributional challenges, unfavorable regulatory challenges, and all that. So in order to wrap up, I have said, what do we need to do? The first one is we need to promote a stakeholder approach to achieving consumer education so that people can learn and know about insurance and how it works. We need to invest in market demand studies so that we can understand their needs, design innovative products, identify viable distribution channels that can work out partnership, push for favorable regulations, especially with distribution. CBN, NCC, NICOM, they need to come together and collaborate so that the SMEs can be better served with all the existing infrastructure that we have in these other sectors outside insurance. We need to take advantage of InsurTech to improve on the efficiency of insurance providers. And finally, insurance companies need to start providing insurance responsibly in a way that is transparent, fair, responsive, useful, and respectful for all these SMEs. Thank you so much for the opportunity. I think I'll stop now until we get to the discussion period. Thank you, Maureen.
Thank you.
Thank you, everyone.
Well said. I know that you want to really constrict yourself into giving this presentation for 10 minutes. It will allow you 1 hour will be enough. Thank you, Dr. Eside. Thank you so much. We hear you. You talked about responsible and responsive insurance. I think that is the correct narrative we should be having about now. We talked about affordability. Dr. Eside, you could stop sharing. Dr. Yetaya, okay, thank you. We talked about affordability and accessibility of insurance products. And interestingly, stakeholder approach also came from your conversation. So in every discussion we've had today, we've had that mentioned. So it means that we really need to have a different approach to this discussion because the numbers, the potential, they are looking at us, they are vulnerable, yet they are masked with a lot of opportunity and potential. So our last speaker, but not the least, the very last speaker for today's event, before we go to the panelists and the discussion from them as well, it's a good friend of mine, Mr. Shino, who is the managing director of Gozi Microinsurance Company. Let me formally introduce Mr. Shino to us as I read his profile. Mr. Shino is the managing director of Gozi Microinsurance Company, the first licensed standalone microinsurance company in Nigeria. Prior to his appointment, he was the head of SME market at Cornerstone Insurance PLC. He holds MBA in marketing and also an associate of the Chartered Insurance Institute of Nigeria. He has been involved in various high-level insurance-related projects that have made a significant impact in the retail and SME segment in Nigeria. Mr. Shino will be speaking to microinsurance as a support mechanism for low-income earners and micro-entrepreneurs. Mr. Shino, you have the floor now. Thank you. Could you please make welcome?
Thank you. Thank you very much for the introduction. First, because of time, I'd like to thank the organizer for the invitation. I also like to acknowledge the privilege of speaking here with, alongside my board chairman, Dr. President Musa. He's been very passionate towards improving the lives of low-income people, and I'm very proud of himself. Today, I will be speaking on microinsurance as a support mechanism to low-income and low-income earners and micro entrepreneurs. And I'm glad some of the speakers have actually, addressed some of those basic challenges that have been faced by SMEs. So there's no point for me to start repeating them because of time. But I'll also go straight to my presentation. Statistics in Nigeria, micro MSME generally all over the world have always been regarded as one of the focal points when it comes to economic development and innovation. And Nigerian statistics confirm that there are over 41.5 million MSME in this country, and of course, they contribute up to about over 96% of the total number of businesses that we have in this country. And they also accounted for about 50% of the national GDP. Of course, there are threats to this organization, their headings and, of course, capital. And some of these threats come as a result of, through various circumstances like financial uncertainty, legal liability, strategic management error, accident, natural disaster, and so on. And of course, there are a lot of policies on top when it comes to the macro and microeconomic policies, because affect the MSME sector. Research also shows that the first 5 years for MSME is always the most challenging period. Close about 95% of them fail within that period. When you look at all over the world, the sector, the low-income micro entrepreneur, have always been the most vulnerable, just like it is said by other speakers. However, they are also the ones that by various beliefs and religion and all of that, they do God religion, just like my board chairman said, they don't want to do insurance because of certain, and of course, the level of education that they have also affects, their belief in insurance. They have different social belief when it comes to dealing with some of their challenges. And for that reason, they are the one that's always falling into poverty whenever there's challenges in the economy. The recent pandemic also confirmed that the rate of poor in this country grew by 7%. This is quite a challenging moment. However, microinsurance is just like an insurance, risk management tool. It's an insurance that is specifically designed for low-income micro entrepreneurs in order to protect from falling into poverty to the best of any result. Microinsurance is just like any other insurance. However, the only thing that makes microinsurance different is the fact that specifically meant for low-income micro entrepreneurs, and that of course affects the peculiarity in which they deliver to that market. Microinsurance also is a form of financial inclusion of ensuring that all adult Nigerians have access to affordable financial services. Microinsurance basically serve vulnerable households at affordable rates, and it's also regarded as an effective tool to extend social protection, and of course also contributing to poverty alleviation. And when you look at microinsurance, because of the peculiarity of the way it is being delivered, there are some things that are peculiar to microinsurance that make it align with this management needs of low-income and micro entrepreneur. One of those have been mentioned earlier on, which is issue related to accessibility, issue related to affordability, and of course, the need for them to be flexible in terms of addressing the appropriate priority needs of low-income and micro entrepreneur. And And then the need for this to be very simple in terms of the understanding and the use of the microinsurance. For our own organization, some of we have done to ensure that we are able to address some of these fundamental in applying microinsurance to income is that from the first goal, from the time we started, we ensure that we build a robust technology base that enable us to deal and connect with some of the aggregators that are involved, with the distribution of microinsurance. And we also try as possible to leverage on some of these aggregators, leveraging on the large network of their, sales staff who are in different communities, in different local government, engaging with micro low-income as well as micro entrepreneurs, distributing our product to them. And of course, we try as much as possible to make the product affordable. Affordability does not mean that the product is cheap. However, affordability is in the sense of ensuring that we align our product to actually meet the align with income structure of the low income. So we do not only just develop some of those products, but we engage with them in such a manner that we can identify some of their income dynamics and then ensuring that our products align with the structure of their income. Of course, also the need for flexibility. You do not develop product for micro entrepreneur when it comes to developing microinsurance product. Develop the product for them. So a lot of engagement do occur anytime that we're about to develop product in our organization in order for us to ensure that it actually meets the priority needs of some of these micro entrepreneurs. And our policies are always made very simple. A one-page document. I mean, that's the only way that you can serve some of these micro entrepreneurs. We do not have time to start reading different lot of pages of documents. There's absolutely no terms and conditions that you have in some of these conventional documents. So a simple page document that clearly states in plain language one thing that you cover. However, I also like to mention that as we are all aware, micro insurance, just like the other conventional insurance, is regulated by NICON, and some of the eligible, stakeholders that are involved in distribution of microinsurance, because we now have microinsurance guidelines that license standalone microinsurance company. Of course, a broker inclusive of other individual and corporate agents are also involved in distribution of microinsurance. And then we also have the conventional insurance that can also distribute insurance through their insurance desk. Of course, there are so many risks that are being faced by microinsurance. However, some key challenges that are faced by microinsurance are issues related to death of breadwinner, education of children, health of proprietors, fire, and other damage to their agricultural businesses or non-agricultural businesses. But one thing that is very important is that having an insurance to take care of some of those identified risks are the only best or smart way by which it can remain sustainable. And I think also my chairman spoke about the need for balancing credit and insurance. Most of the time, often than not, what micro entrepreneur concentrate on is the need for them to continue to access credit, to grow business, to grow jobs, to grow income, grow assets and all. But some of these things can quickly be lost whenever there is any suffering for it. However, these are some of the benefits of microinsurance to some of MSMEs. Some of them do not realize it. Microinsurance is a means of protecting them against the effect of risk. It guarantees sustainability of their business and future of their family, and a tool to extend social protection, affordable to meet their cash flow. And then the association of group gets more involved in distribution, in the development of it. Microinsurance is not a product, like I said earlier on. The potential customer, the group, always gets involved in the development of the product so that they can express their pinpoint where the thing, the challenges really are, and that helps in developing a product and really address some of those things. However, I also like to mention that some of these microinsurance not especially because of the lack of knowledge. Microinsurance can actually be explored in a great manner to help support, or address some of the challenges that are being faced by in their business. They can explore microinsurance to address some of those things. And some of those challenges, of course, relate to using microinsurance as a reward to serve as a loyalty. I mean, to serve as a loyal customer, not that for them to retain them for a longer time. You can also use microinsurance to increase the profitability of their business, and microinsurance also can help them, transfer some of the certain risks, that associated with their business to the insurance company. And of course, also microinsurance can make them stand completely out, from their competition. What I do say to some of these in some of our engagements is that if I sell a fertilizer and the other party sells a fertilizer, if I can creatively come up with a bonding and insurance product that's affordable to my own fertilizer in a creative manner, then I've already, differentiated myself and I've changed the game of the competition. These are some of the ways that micro entrepreneur can actually explore microinsurance to address some of the challenges they are facing in their business. And for us, being this pioneer in this sector, for the few period that we have come into operation, I'd like to just give the synopsis of what we have done within that period. We have done over 400,000 transactions. We have also enrolled over 219,000 individuals, and then we have paid over 138 million naira in terms of claim settlement. And when you look at the category of people that we have settled this way, they are essentially 99% of them are actually artisanal market women, trader, micro businesses who never thought insurance work, and it has really substantially helped them in remaining sustainable. Otherwise, what would have been their fate if some of these interventions were not there? So we are a composite microinsurance company, and we have a robust technology base that can help us engage and connect with some of the aggregator, potential either individual or corporate, partners that can work with us, or that with technology that can enable effective and seamless integration or working together to ensure that the partnership is effective. And of course, also we are welcoming, of course, aggregator, microfinance bank, individual, and corporate agents to come with us, to come talk to us so that we can, of course, see how we can help support their businesses. Our recommendation and conclusion, of course, is that MSME should embrace microinsurance not only as a means of protecting their business, but also as a tool to, actually face or address some of the challenges in their business. They should engage related organizations to walk them through the journey and also have the right question. And on that note, I want to say thank you for the time.
Thank you. So well said. Thank you so much. I like the case study you brought in, the reality check of how microinsurance does work, and real life scenario on how you've achieved sustainability in the operation. Thank you so much. Really appreciate it once again. So indeed, it's been a very interesting learning and conversation. Started with a welcoming speech from the president, who gave a very interesting definition of what financial inclusion is. Finance is needed in everything that we do. So why should some people be excluded from it? And he did mention that the big funds and money that we are talking about, that is the micro fund. That is not where the potential is. It is in the micro. It is in the little money that we all have in our pocket that counts. So we also went into the keynote speech by the founder of Lapo Microfinance Bank, Dr. Godwin, who gave a great synopsis of what it takes to build the market, given his experience in building a microfinance bank. And of course, he mentioned stakeholder collaboration and investment of time and resources that building this micro inclusion initiative entails. Mr. Abdul Rashid of Leadway is in the rural area of Nigeria in the north. He gave a practical example of how he engages and educates people in the north on what the product is selling is, and how respite is also brought to them just by buying such product. And Mrs. Odiri talked about the mutual fund, the micro savings that how micro savings can be achieved, going away from the populace of the ever busy cities and going into the hinterland. Then Dr. Yesterday talked about the inclusive insurance for SME in Nigeria. So she defined what inclusive insurance is. She talked about selling responsibly and being responsible as well, ensuring that your product fits the need of the market. Then, of course, Mr. Shino gave a very good closing to all the different conversations. He talked about affordability and understanding the income situation of your client before you could design a product for them. And it brought to play what Gozi Micro Insurance is doing and has done so far. So we have a real life scenario from him on how micro insurance can actually alleviate poverty and ensure sustainability. So indeed, it has been a very interesting conversation. Could you please appreciate all speakers? So we'll go straight now into the panelists, to the panel discussion, I beg your pardon, and we're going to be having 3 of our speakers as our panelists. Dr. Godwin is part of our panelists. Could you appreciate Dr. Godwin? He's already seated there, so remain here with us. Dr. Yeside will join us virtually. Dr. Yetayo, are you still on call?
Yes, I'm here.
Okay, good to have you. And of course, Mrs. Odiri Ogini is also seated here to talk to most of the narratives, most of the interesting conversations we've had here today, and they're going to kind of deep into it and give a clearer scenario and interesting talk to it. So we'll go straight into the. Okay, you're welcome for those our online community. Thank you for staying with us, staying true, and thank you for your contribution so far. If you have questions, you have suggestions, whatever you have, however you want to engage with us, please use the chat box. And if you do want to talk virtually, kindly raise your hands. You will be acknowledged and we will listen to you. As well as our in-person persons, if you want to make any form of contribution, please indicate and you'll be attended to as well. So, Dr. Godwin, I'm coming straight to you because you gave the inroad into today's conversation. I'm very sure you did not share your notes with the speakers, but most of them actually took a thing or two from what you said. Do you agree with that, sir?
This is essentially we're addressing almost the same issue. So I think it was normal, to make reference to some points I have raised in my paper.
Okay, so my question to you from about 3 or 4 of us that did mention stakeholder approach. Now we're going to be very realistic and practical in this stakeholder approach discussion because we understand the scenario, we understand the kind of nation that we are in, the kind of peculiar people that we are. We do like to work in silos, and that's true. We do like to be very individualistic. Now, the attention of financial inclusion, if we really want to bridge the gap from 41% that is staring at us to increase that number, we need to achieve stakeholder approach. What's your take into that? How do you think this can be done, sir?
For me, if actors advocate for stakeholders approach, for me, I need partnership and linkages. It is not just because it's a wish. It's actually something they need to do if they are to survive, or they are going to do the business in a more sustainable manner. I give you an example. Let's take it was highlighted that if you were to set up your structure, if I am already in a community and you want to do you want to do mutual business. So if you were to come again and set up the structure there, whatever investment you put there obviously will be underutilized. and that has implication for your cost and return on your investment. If on the other hand, that already have a structure and you just leverage on that structure, it makes it easier for you and also more cost effective. That for me is the key. Doing small businesses, doing those micro businesses, doing it alone in most cases is not viable. But if you do it with others, you leverage on the structures on others. So it is not what you just wish to do. I think it is something that you should do.
So you agree with me that it's going to be a long haul, but it's a possible one. That's what you're speaking to.
No, it's not going to be. It's not going to be possible, and I think it's easily possible if you look at some other arrangements that are already there. Sort of collaboration. For instance, because Lapo Microfinance Bank has the footprint across the country, we have had insurance company for many years before we set up there, who had actually been delivering insurance policy through our structure across. At the moment, we have a number of solar lantern vendors who are actually distributing the solar lantern products through the Lapo structure across the country. So already those things are already there.
Very interesting, very interesting. I like the scenario that you've painted, and it gives us a very good conception. It gives it helps us really perceive and give a picture to what stakeholder collaboration should be and will be. So my next question is going to go to Mrs. Odiru. And the economic reality is real. Do you agree with me, people?
Yeah.
The economic reality here, it's staring at us face to face. Now, you're talking about financial inclusion. Financial inclusion is a way of investment. How do I invest when I don't even have enough funds to take care of myself? Please show some light into that, Mrs. Odiru. Thank you.
All right, interesting. Well, I think if you look at investing as I need to have money to invest, then you see that as a challenge. But for micro savings, mutual funds, basically as little as possible, we are able to start with. So for mutual funds today in the market, the minimum investable amount is 500 naira. So but that can be brought low, particularly in the rural community, to as low as 100 naira. I know there are some fintech platforms that partner with mutual fund provider. If you go to CarryWise, you will see United Capital mutual funds on it. So for CarryWise, a fintech platform allows you to invest as little as 100 naira. So I think the angle or the mindset of looking at investing from the point of view that I must have so much money or I must have a lot of funds to invest, will not help us achieve the financial inclusion that we're looking at. But letting people know that as little as 100 naira, 50 naira, it's a regular savings. If every day you put in 100 naira or 50 naira, even 20 naira, depending on your earning capacity, compound that over 5 years, you'll be surprised how much you have accumulated, within this period. And then let me bring this also to what you talk about the stakeholder approach. If you look at the telecom companies, they have the infrastructure, they have the structure to be able to drive financial inclusion, be it in the form of micro savings or microinsurance or microcredit. People spend a lot of money buying credit or data. People that say they don't have money, they spend a lot of money. And what the telecom companies have done, they've brought down data to as low as 100 naira. So when you buy data 100 naira, you don't know that at the end of the day you might have spent 500 naira or even 1,000 naira. So imagine if there's a structure that partners with this telecom that even if you are buying 10, 100 naira, a portion of that is saved. That is accumulated over 10 years, 15 years. You'll be surprised how much you need to accumulate. So the point is that it's not a function of how much money you have or you earn, but the regular savings and in a smaller portion that we're able to achieve. Thank you.
So I'm sure you're speaking to the consistency and the mindset of the people. Thank you so much, Ms. Odiru. Dr. Oyetayo, now trust is an important criteria for anyone to do business or to do any form of investment. Financial inclusion inclusive as well. Now, trust is in the deficit here when you want, especially in our nation, Nigeria. How do you think we can bridge this trust? How do you think people can trust the product, be it insurance product or other financial product that we need to achieve the financial inclusion initiative we're talking about? Over to you, Dr. Yesterday.
Thank you, Maureen. I mean, if you talk about trust, we in the insurance sector actually have a larger deficit than any other subsector in the financial world in Nigeria. And I think we trust, some of the issues around trust is perception of people about the organization or the business or the sector entirely. So what we say in insurance is that because we need them to trust us before they patronize us, it's very often good to leverage on existing infrastructure or socioeconomic networks that they already trust. For example, you want to go and sell to some women in the market. They already have their own system of management and the associations that they trust. So rather than come yourself as insurance companies, the first thing is to try and get the trust of the leadership of those organizations, and then you can now sort of leverage on the existing trust that their members have for them. And a lot of times, I think we need to be a bit customer-centric. We need to engage our customers in what we do. For example, in insurance, we want to design a product for a category of people, engage them, let them be part of the product design process. So they understand from get-go what you're trying to do, and they know where they're going with it. Like I said, I mentioned a stakeholder approach to consumer education. Consumer education is key. Banks have found a way around it in a way better than we in insurance. We are still struggling. We are still struggling. We need to go to the position where people understand insurance. And because if there's no trust, there's no relationship. If they don't trust you, they can't patronize you. So what we need to do is go closer to those that they trust and leverage on existing trust so that we can start building our trust from that. And whatever thing we're offering, whatever product offering we're planning, let it be done in collaboration with this market that we want to serve. Gone are the days when insurance companies can just sit in the office and design products because they think or they presume they know what the risk situation or what risk they face. Yes, you may know the risk I face. Well, how do you understand my risk priorities? What is my priority? What am I ready to pay money for? Or what kind of risk am I ready to buy insurance for? You will never know that until you get in touch with me or you understand myself, my business, my aspirations, my needs and my wants. So this is what we're saying. With insurance, what we're preaching is get closer to your customers. Don't make it a situation when you want to sell, that's when they see you. Get to know them, leverage on existing trust, and then build trust into the product to sell. Let it be transparent enough, simple to understand. Don't write it in a language they will not understand. And when I said the other sectors services have done better, I know what I'm saying. For banks, if you go to an ATM now, some ATMs have instructions in vernacular, in languages, very major ethnic languages that we have. The same thing with NCC, network providers. So that's what we're looking forward to in insurance, the ability to provide the services in an area, in a language that they understand, and building trust in our products through that process, all through the value chain of the insurance industry. Thank you.
Thank you so much. Thank you, Dr. Yesterday. Thank you. Thank you. Mr. Abdulmalik, our attention is drawn to a question directed at you at the chat box. Could you kindly just give some insight to that question?
Okay, all right. I'll just go through them one after the other.
Okay.
The first question is saying, reclaim process is very long. What are we doing to reduce the time for payouts? Let me remind all of us again, I work for a legal assurance company. And at Leadway, we...
Please make it as brief as possible.
Okay. So we understand that agriculture is time bound, and if you're going to pay claim, you need to pay it for the farmer to be able to go back to the field for another planting cycle. So we make sure that for our annual yield index insurance, once data is collected in the field and processed, claim payment follows as soon as possible. So we do not delay claim at lead. Then for the gap, I want that is a good agronomic practices. We are not the farmers ourselves. What we do here is that once we are bringing farmers on board, we ask them to bring the agronomic calendar, because we already have our standard agronomic calendar for each type of crop. So we compare and see what we can do. Look at what pre-emergence herbicide you're using, the post-emergence, how much of it you're using, what are the active ingredients. If it's not okay, we recommend it for you. Then we adjust to agronomic calendar to make sure it's going to give you the best. That's what we do. We cannot stay with you on the field from when you plant to when you harvest. So that would be difficult for an insurance person to do, and nobody's even ready to pay claim, to pay the premium for and all. And you know, part of the thing we are considering is looking at how we can cut down costs for these farmers to be able to afford this product. So for adjustment, that is question number 3, after crop cut. What we do is that the enumerators are coming to the field. They come with a paper and a pen. Once they weigh the cereal that they have harvested and threshed, you will look at it. You see the weighing scale yourself as the supervisor of the aggregator or the farmer himself. They look at it, you see what the enumerator is recorded, and you sign off on the paper after the data has been collected. This is the same data that will come back to you as report. So it is very transparent and clear. Then the 4th question is saying, for monitoring and evaluation, like I mentioned in the first place, we can't be on the field all the time with the farmer. We are not going to be able to determine, oh, did the farmer apply 4 bags of fertilizer or 1? What we are tying, that's why the policy is clear and unambiguous. What we are covering is natural occurrences. If you come to the farm to do your crop cut, and we see that there is no flood, there is no incidence of pest and disease, there is no fire incident, there is no any of these perils covered under the policy, and you're still having shortfall here, that means you must have done something wrong in your management practice, which the policy do not cover. So it's as clear and unambiguous as that. So part of the things that we do too is what we do. It's called crop development follow-up or calendar, which we often send to the aggregators or the cooperative leader to fill for us, to enable us have idea of what is going on the field. Are there losses already at the interim? Then how can we help? We give necessary advice where it's possible, and that's for the last question. Thank you.
Okay,
Dr. Ita, are you there? Okay, I'll go over to Dr. Godwin. Dr. Godwin, if you were to add...
I'm here.
Okay, you're there. Okay, we have a question for you here. Now, some people already have a coping mechanism. Already they are coping, they are mitigating their risk in one way or the other. They don't need to imbibe the financial inclusion strategy we are talking about now. So if you were to give briefly 1, 2 scenarios, 1, 2 advices to people, what are the quick wins you think they could take to immediately?
Okay, like I said, insurance is the most efficient way of managing your risk. You may have existing coping mechanisms, but the value-adding benefits that insurance will afford may not be available under those coping mechanisms. And then insurance has a holistic way of helping you, not only providing risk mitigation tools, it also enhances your access to finance. because a lot of banks will be willing to give you finance and loans if you have insurance backing. It also encourages, it boosts your efficiency and grows your business, because you can actually afford to get facility to improve on your businesses. These other alternative mechanisms are not likely to provide you with that. So insurance remains the most efficient way to manage risk for SMEs. That's my take.
We have more questions on the chat box that needs attention. Do we have people that want to speak to us virtually? Okay, no. We'll come for the
someone's hand is raised there, Babatunde. So can you please check the online Zoom platform? There are hands raised here. 2 hands are raised.
Okay, we can just take one person virtually.
Babatunde Olare, why those hands has been raised for a while?
Okay, Olajide, can we have you in just a few seconds, please?
Babatunde.
Okay, thank you so much. Thank you for the presentation. I think one of the key things, one of my questions, which Leadway Insurance asks, because for trust issue, this is a basic problem in agri insurance. Many farmers don't trust insurance companies because of there are some hidden laws that are not known to farmers. Now, my question is, how best can we make insurance laws more transparent that even smallholder farmers will understand? And how far can we checkmate insurance company when actually they are cheating farmers? Thank you.
I want to throw that open to my panelists here. I want Dr. Godwin to speak to that, and I'm sure because it's in person, I know it will be as quick as possible.
Yes. Okay. Oh, there is this thing that people always say that when insurance company are taking a policy, they will give you your sign, and in most cases they are written in very tiny letters, print, and then eventually when the risk sort of materialize, then you now know that it is. But I want to say that I'm not speaking for the operators in the industry, but I want to say that things are changing. If you look at the way many insurance companies are now responding when it comes to claims, that tells you, because that's actually the basis of all the divorce or lack of it. So things are changing. I think what we really need to do, both for the big insurance and even the micro insurance we are talking about, is massive education. It's massive education and awareness.
Thank you so much. The business is evolving, they are developing, and they take very seriously into ensuring that they meet all the demands that is expected of them. So we want to sincerely thank you out there, those of you that joined virtually. This program was brought together by Etinard Consulting and the Nigerian-Belgian Chambers of Commerce. It's been an interesting conversation here on financial inclusion, microfinance, and microinsurance. We are known to create impact, so this conversation is not going to stop here. This conversation is not going to stop here. There will be follow-up events. We are going to have a follow-up to today's event. So advise that you stay very tuned to us. Go to the website, follow us on all social media platforms. Just engage with us so that you are informed and well abreast of all our activities at the chambers, and you can also be invited for the events when the date is communicated to everyone as well. If you're interested in partnering, if you're interested in becoming a member of the chambers, if you're interested in sponsoring any of the events that we are holding, you're welcome to also engage with us. We'll be very delighted to have you on board. Thank you so much for your time. Thank you. We've had an interesting conversation with you virtually. The conversation still goes on, but if you will get caught up, thank you. We appreciate your presence. So while we continue, we're still here. So we had a few people in person that wanted to speak to all our conversation